Hello, everyone, and welcome back to another exclusive Boom Room interview. I'm Sasha with Arcanum Ventures. I'm here with my good friend and colleague Carmelo. And
Hello,
today we
hello.
have the pleasure to speak with Fabrizio Giabardo. He is the co founder of Legion, which is a retail investor focused capital formation platform operating in the digital asset space, also known as a launchpad. Fabrizio, welcome. Thanks so much for coming on. How are you doing?
Bloody good to be here. Thank you for having me. I think to kick it off, typically we try to tend to stay away from the name Launchpad. I feel like historically Launchpad model has been fundamentally broken. And we sort of see the space a little bit larger, kind of who we want to play with. Eventually, we want to be competing with IPOs, etc. So yeah, general around like public fundraising platform or capital formation
Mhm.
platform, which sounds a bit too fancy if I'm going to be honest with you.
I
But
like I like this fanciness, to be honest. And it's funny because the term launchpad, like, it predates crypto IDOs, ICOs, etc. Right? There's many forms of launchpads when referring to startup. But yeah, like the capital formation platform, I think sounds fantastic. And I wanted to start this interview in maybe the same boring way all of our audience members are used to. Give us an idea, who is Fabrizio? um, how did you get into the Web3 or digital asset space, and how did you end up here speaking with us today around Legion?
yeah, happy to do so. Yeah, so I guess super long story short, I mean, we could start even back in university days, comp sci, geoscience. I was top of my class for economic geology, did a stint as exploration geologist a little bit doing like nickel laterite and Scandinavian exploration, which is a completely different life in the outback of Australia, just digging holes. But yeah, I think I kind of moved back to the tech side. I've always been really interested in tech and science and sort of discovery. Um, Started my career in corporate, in Big Four consulting. Did that for a few years before my soul slowly died away, and then ended up moving, doing a ton of work between Australia, then into Southeast Asia. Picked up some gigs there. Moved over to London. Did freelance, mostly corporate, Rolls Royce, Unilever, Nissan, largely around kind of like strategy, kind of like value proposition design, go to market, this kind of work. And then I got more into startups at the time, and I kind of found it fascinating because unlike corporate, you can actually make change that's actually impactful rather than just
Oh yeah.
saying, "Yeah, that looks nice," and throw it in the bin. But yeah, and then I mean, I was part of a health tech startup, got acquired by one of Australia's biggest retailers, and that kind of gave me freedom to go into something I've been passionate for a really long time. I guess on the like blockchain crypto side, I do have this weird accent. My old man's Italian. My mom's like Polish American. I was born in Australia, so lived in a lot of different places. But my parents had like really bad divorce when I was maybe 5, 6. My dad's like a primary school teacher, didn't have a ton of financial literacy. My mom wasn't working. She had me when she was super young. And anyway, after this very bad divorce, which we can fast forward through, we ended up in like a pretty tricky financial situation, I'd say. So I never had a lot of the same opportunity as like a normal kid might have. Um, you know, living off food stamps, not being able to do a lot of different things, and sort of from like a really young age, it was like ingrained into me that like, okay, if you want to just at least be on equal pegging, then you've got to work 10x harder. You've got to do this. You've got to do that. And I think that I've always sort of had this idea of being an underdog, and now an active underdog maxi, wanting to support those that don't necessarily have the same opportunity. And I think the whole idea about blockchain, like I was back in uni in 2013, 2014, my housemate was super into, he was like participating in Ethereum ICO. He was like trading Bitcoin before that. um, I really fell in love with the idea. It's like, okay, if you have internet connection and you have some demand or desire or means to go do something of yourself, like you have a chance to make it, right? The beautiful idea of like equal opportunity. You're never going to get equal outcomes, but at least we should have some level or close to equal opportunity. And I think that's why I fell in love with crypto in the first place. Was actively participating for a long time, and then yeah, as mentioned before, with the health tech, it kind of gave me free reign to jump in and build full time, which would have been about 4 years ago or 5 years ago. I originally actually started doing some building in the Terra space. If I'm sure everyone's familiar with what happened there. That's originally where I met the guys from Delphi. They're obviously very, very into Terra and UST. We're building some crazy stuff, and we built relationships there. And then after the Terra blow up, I kind of played around Cosmos, some different DeFi protocols, etc., and around. And then, yeah, I've always been interested in this idea of capital formation because I think it's crypto's killer app, right? Look at like the first ever ICO Mastercoin back in 2013. It's kind of like, if you actually, you can probably go back to YouTube and see videos of the idea of Mastercoin being introduced, and it was very like anti, Silicon Valley, anti like VCs, like anyone can do it. You just need to send money to an address and like fund this wallet. And I think I look back there, and like the Mastercoin like ICO actually had really great disclosures documentation with it. And it's kind of funny because if you look at the whole life cycle of this means of incentive distribution, right, via tokens, like ICOs were the big boom. And then after that, regulation came in and basically forced a lot of things into the private markets. It's kind of how we ended up into where we are today. We can discuss about that later. Then you had the sort of new meta around airdrops and DeFi summer, and then you had the points meta, and then you had, I don't know, now you kind of have like InfoFi stuff. And it's just like we go through all these different means of incentive alignment. But I've always been a strong proponent that capital formation and like putting your own capital is the most effective mechanism for incentive alignment in all of crypto. You just have a different psychological relationship with it. You bring in anchoring bias, you bring in a ton of other endowment effect, etc. And yeah, it's just a much different relationship, because if we take a step back, like the superpower of tokenization is coordinating real world behavior at scale.
Yeah.
If you can do that with the right people, then you end up being able to build an ecosystem significantly better. If you do it with the wrong people that are very extractive, then it's not as effective. So that's more or less kind of how we got to where we are. Like, we've been super bullish on capital formation. We've been super bullish on crypto rails being the most effective means for capital formation on a global scale. And yeah, we can explore all these ideas today. But it's I said short, but it turned to be a very long-winded introduction.
No, that's great. That's exactly what it's there for. And just kind of to keep moving that along, we were going to say launchpads, but as you said, like capital formation, how has it's been a very competitive landscape since 2014, but more so since like 2021, I think was the first time that a lot of people heard of these IDOs, which was the next evolution of ICOs. But can you tell us like how that led to Legion being created, and give us like a high level overview of what Legion's doing specifically to change that narrative and drive it forward? Because it seems like the space is largely stagnated over the last 12 to 18 months.
Yeah, definitely. And I think, if, like I said before, if you look back in like the 2017 era with when ICOs kind of boomed, is that like the amount of money that could be raised to fund incredible ideas was insane, was next level, right? Obviously, a lot of this was fueled by speculation, and the bad mechanic here is that you would get a ton of fundraising before even proving anything out, right? So obviously that led to less than desirable people participating, which obviously led to a lot of negative outcomes, which then brought in regulation, right? After the DAO hack, you had the 21B report from the SEC, and then they started cracking down on it. So I'd say, like, if we maybe had a bit more luck and didn't experience a lot of that, we probably would have been a much different like way the globe can fund different ideas. But kind of symptoms of why Legion was born was that because everything moved to the private markets, right, more traditionally, then you ended up largely with a few fundamental issues, but the main one being inorganic price discovery.
Mm-hmm.
So what do I mean about inorganic price discovery? I mean that like a founder would sit down in a room, and you guys are on the venture side, you'd be like, yeah, this is like $20 million. Like, do you guys agree it's $20 million? And they're like, who else said it's $20 million? Well, I had another VC told me it's 30 million. And then a lot of people want to invest at this valuation, then it must be 30 million, right? And just like, okay, now let's do another private round. Last one was 30 mil, and we want to obviously show upside. So let's make it 80 million, or let's make it 90 million. And I think like that sort of disconnect between like what value was actually being delivered or could be delivered. Obviously, very realistic. Most of the price today is speculative valuation. 95% of the price, in fact, maybe a small amount determinist valuation. We're sort of seeing the new meta come in as like actually buybacks and revenue. But this inorganic price discovery basically meant that by the time any of these assets would make it to the public market, almost all of the upside was already gone, or you ended up in a position where it was way overvalued, and you're just going to wear a ton of sell pressure that you could never maintain, and that's why we end up with a lot of sort of down only charts. So I
Yep.
think from like the founder's perspective, it's not an easy thing to go out and fundraise and bring an idea to market, right?
Yeah.
You have to dedicate a ton of time, like that takes away from the core things, like what you're trying to solve, what you're trying to do.
Yep.
I think so that we were also very unimpressed with the market structure, with by the time like assets would make it to public, what was happening there. And then that's why you ended up with this like low float, high FDV, because like, okay, this thing's so overvalued that we could control it with market makers and just make the float very small and make it seemingly very big. And then we can cut like big OTC deals with people and like exit, as a team and vice versa. So yeah, I think as mentioned before, like we've been fundamentally bullish on what, crypto rails can do. And we want to take it much bigger. And then the final insight I'll share here, especially when distributing your public. So you'll be well aware you have this two-way opt-in in the private markets. You'll sit down with a venture fund, they'll do due diligence on you, you do due diligence on them, right? There's a lot of there's like significantly less information asymmetry than when you get to public markets. And everyone probably poorly assesses the project, but they have no say on who they're distributing your token to. So then we realized, okay, not only that, but you want to be able to distribute your token to quality people. How do you do that? Then we published our white paper on this idea of like meritocratic fundraising, which is another fancy way of saying merit-based fundraising, which is an even fancier way of saying you distribute your token to people that are going to add value to the project, which is net beneficial for everyone, instead of people that are going to extract value. And that's kind of how we arrived with this Legion score mechanism. So that's more or less Legion. Kind of again touching on the things like removing that or breaking down that inorganic price discovery, kind of trying to improve a lot of the market structure, especially around when public can get access to it, and then finally making it more meritocratic, where you want to connect value add projects with value add network participants. And then a bunch of the other things like around regulation, which we can speak to, have also been more general unlocks.
Yeah, I wanted to add a quick note because you reminded me of this. It's not exclusive to crypto, this issue of price discovery, but I read something the other day that OpenAI's, pre-offering equities being valued at $500 billion, and people are talking about this AI bubble, and where does this price discovery happen, and who's determining the price, and who's it's happening, but in a more archaic way, in a less efficient way. So this is not exclusive to crypto, but you're absolutely right, and we've seen something like Copper Launch and Bootstrap liquidity pools and Dutch auctions, and everybody's trying to find the best mechanism for price discovery, but nobody's quite cracked the code yet. So it's definitely interesting to hear more about that. And like as far as your motivation, I think you already covered it, but what was the main genesis moment for Legion? Like you and your co-founder, like, this needs to happen. Like launchpads are just not doing a good job right now, or capital allocating platforms, because it's not just launchpads.
Yeah, definitely. I think you bring a pretty good point, especially around the price discovery. And I think for crypto, it's a little bit harder because it's amplified in the means that the asset is liquid sooner, right? It's a whole lot easier to like exit an equity deal, for example, in more traditional side of things. And because of that, you don't end up as like these crazy like dry FOMO buying pressure on day one and then exit kind of thing. So I would say that definitely, like this is a huge domain to explore, but you almost have this like counter, idea around like early stage investors and founders and team wanting this thing to be valued as high as possible, right? Because obviously it's like the economic incentive is there for them, especially like if it's not liquid, you can write it on your books and then you can raise another fund in the future because you're sitting on this like 100x paper gain, even though there's never that much amount of liquidity. So yeah, that's a very difficult problem to crack. And then, I think like the moment for us is like we've been like Matty Tokenomics is my co-founder. He's a absolute machine. He wrote a book called Tokenomics for Builders. Yeah, he is like it's been like positively reviewed by a ton of people. They're trying some very high name projects are trying to poach him, and we just got started on this project. Glad he stuck around and to push this forward. But yeah, he's been super passionate about kind of like working with a lot of teams and realizing like they're spending so much time designing the tokenomics, and then they would just be like the minute details, and then they would just give a bunch of float to some random thing. They'll just immediately dump, and it kind of like doesn't make it regular anymore. So I think like we both always came like we came from different backgrounds and different motivations, but we always arrived at the fact that like the current market structure for this thing is not good, right? But like crypto can provide a 10x better improvement on what's done in traditional finance today, and we're very like active to make this happen. So we're not passive people. We like to see change and make change, and yeah, here we are today.
Hmm. It's really interesting because I think we've encountered a lot of the same pain points, and we work within the field of tokenomics as well. And you know, this lingering on this idea of price discovery, this has always been a challenge. There are massive conflicts of interest, I think, and historically, like in our perspective, when we're talking about these capital formation platforms, they're usually living maybe like at the end of the tunnel when it comes to this journey of taking a product or a digital asset to market. And a lot of times when you have a company like Legion, for example, that's more so like ethos driven, it's difficult to kind of like ensure that this is done correctly, or make sure that you want to bring, let's say, a product or an asset to your community of people that might really believe in it. If it's kind of been, I don't know, I don't want to say corrupted, but corrupted like in the earlier stages when it comes to like the split of the pie, or like the investor VC involvement. But it's interesting because I think Legion and maybe some others in this space are shifting more into like an advantageous position, because there's been a lot of this corruption within like the Web3 VC landscape, and people are becoming more and more receptive to companies that are avoiding that route, or maybe like not dabbling so deep into it, especially when we're starting to see lately how blockchain and Web3 is being applied towards more consumer facing products, right? And so
Mm-hmm.
you guys are in like a great position to actually impact that change and align it with your thesis. And I want to dive a little bit more into that thesis, because I've seen since Legion's, let's say, launch, maybe late last year, you guys have been quite active, and there's been a number of really notable companies that have come through the platform. And it looks like a lot of the focus might be on what you might refer to as blockchain infrastructure. So I'm curious, like how does Legion kind of getting around to connecting with the teams that it wants to? What's the focus here? And how do you guys do your due diligence to make sure that you're connecting like the community and the company in an efficient way?
Yeah, these are all great questions. And I do want to stipulate very clearly that I'm not like an anti-VC guy, right? I think venture capital, there's some great VCs out there. They add a ton of value, and they add different value than like you would get from an angel or retail, right? Yeah. Um, I think there's definitely bad VCs, but equally there's definitely bad retail, right? There's people that don't care anything about a project. They'll be in Discord, one token, one token, one token. When a free airdrop? Why didn't I get a free airdrop? Immediately dump, and then off to the next thing, right? And I think it's just like we largely look at it is that we want to remove this extractive behavior. And I think that for us is like we do feel strongly about this, but projects feel the same, right? There are thousands of tokens, thousands of projects per week that kind of come out, and they're trying to capture attention over everyone else. And I think the genuine ones, they fundamentally do want to distribute their token to a meaningful community. So I think like it's never been a hard sell. Like teams have been super receptive of it. I mean, it's just natural in the progression. Like as opposed from a Web2 company and Web3, you're not just building a single product, right? You're creating an ecosystem around it. That's a whole idea of like distributing this incentive alignment. So I think all teams have been extremely receptive. And then you kind of touched on the second point here is like, how do you like vet for a good project? So we work very closely with the team from Delphi Ventures. In a lot of ways, they actually like, if you're familiar with the Delphi Ventures and Delphi Research and Delphi Digital founding story, they're just a group of friends, ex kind of, they're in traditional finance, Bloomberg or whatever. And they're like, wow, look at this Bitcoin thing. And their guys were like, Bitcoin, stop working on this. And then they ended up spinning off and then doing a bunch of research reports, and then try to like put a few funds together, and it was super interested, and then they just went like their own capital and then went big on Thorchain, and then basically off the back of that then they could like continue the research thing, then they had a bigger arm, and then all of a sudden now they had a brand, they were getting all these great deals, and they thought like nothing's really fundamentally changed, like why didn't we have these same access when we're just like a bunch of retail guys coming together to be like, hey, this could be a good project. So it's like we do want to bring back a lot of that ethos, and I think projects also are aligned with that, because like if you can do this in the right way, you can have super effective communities that are very strong proponents and advocates for you, but in a meaningful way, as opposed to just like vanity metrics, pumping an airdrop and then leaving immediately. I will mention one thing. Legion of what it looks like today is been undergoing this fundamental shift and change since like January this year. I think when I said before on the market structure, like this meritocratic fundraising system, it works well. It adds a ton of value. Founders love it. But I think we realized working with like early stage projects and projects coming to TGE that if you don't get the TGE right, you could be an amazing project, but then token price goes down, tech's bad, right?
Oh yeah,
Mhm.
absolutely.
And whether you like it or not, like token price is the biggest marketing mechanism that you have, and that kind of kicks off a lot of the flywheel. And you can either end up in this loop where it's a very vicious cycle where like communities losing faith, token price going down, investors are less likely to help out, team is less motivated, and like that really spirals out. But on the
Yep.
flip side, if you crush that, like people come out of the woodwork to want to help and engage. And like we have a ton of data, and we see this today, right? It's like if people front their own capital, they're already economically incentivized to see it do well. But if it starts to do really well, then they're telling their friends about it, right? They're using the product more likely. They're engaging in a more meaningful way. So we sort of said, okay, what does like a more holistic offering rather than just a token sale look like, especially centered around the TGE events? And so I think the raise is nice. Okay, it's kind of like trust by proxy. We didn't really change that much, but now we've got like VanEck and Brevan Howard, and we have a community allocation, and then we've got a bunch of the Western exchanges like Kraken or Coinbase Ventures or Crypto.com Capital. That's kind of like step one. That's kind of showing a bit of signal that okay, yeah, maybe these guys are doing something a little bit different. But we have another 2-3 announcements for the rest of this year that will come out and show a lot of like what our new focus is. Because yeah, like I said, it's like yes, tokens as a play right now are great. Is there a possibility to leverage other elements and make some more markets liquid that they might not, or vice versa?
Interesting. Yeah, just for a little context too, like we are obviously investors, but I think we align more with the the Delphi type investors. Like Sasha and I are research driven, and we do specialize in designing token economic systems. So we're always thinking about incentives and flywheels and how the token makes sense. And furthermore, how do you put the token utility wise into the hands of people that will actually use it instead of those that will actually sell it? But yeah, I think you brought up a great point about this, and we want to dig in a little bit more into the merit-based investing or allocation. One of the problems we had in the past with syndicates, for example, syndicates will ask for an investment for one of our portfolio companies, like we want to invest $1 million, but when times are really good and everybody's competing for the same investments, there you have to prove yourself. Like, what can you bring besides that check? How big is your name? What is your halo effect? What is your mesh network effect? Who can you connect us with? You have to prove your value aside from just giving us money. And now when the investing space is largely dried up in many ways, we're not having that same problem. We're actually saying we'll take money from anywhere. So it shifts from time period to time period. But where does this sort of play into your thesis about merit-based? What sort of areas are you looking for merit? Like, for example, marketing is probably a major one. Like, can you contribute in other ways besides allocating some investment? Can you represent or connect, or how do you kind of reward people or give them a reputation score on your platform?
Yeah, these are all fantastic questions, and I think like you basically gave a prime example of like not all financial capital is created equal. The example you guys gave is like you can help out with tokenomics. So not only is a team going to be raising financial capital, you're economically incentivized to see them do well, but you're
Yep.
actively working with them. That's an example of like someone that's going to contribute to a project in a meaningful way, as
Mm-hmm.
opposed to being like, yeah, let me just write a check and then never hear from me, and then like day one, like market sell.
Yep.
And I think like we want to take that same thing and then bring it to public markets. In the private markets is much easier. Like there's only a finite number of people you speak to. You'll have a fund. You go through IC. You'll speak to each other. Maybe have 2 or 3 calls. You're never going to translate that exact thing into the public markets, right? A founder's never going to sit down with like 1,000, 5,000 potential retail investors. So we came up with this Legion score mechanism. We put it in our white paper. Basically, the key insight here is that projects define valuable in many
Mm-hmm.
different ways, right? I mean, from like the retail side of things, the most immediate ones is just like social proofing. It could be marketing, talking about a project, creating sort of hype and ensuring like from a social perspective, it's like a very positive situation.
Mm-hmm.
The second one is like actual users. If you're a perps protocol, you probably want like big money traders. If you're like a socialfi platform, you probably want people with like a ton of mind share. If
Yep.
you're a gambling platform, I don't know, some real degen people is what you want to have involved. So the Legion score is kind of the mechanism to help get that two-way opt-in into public markets. So on the Legion score, there's sort of this two asset. It's like one, you've got the qualitative information. So you can think about like you have a maybe like LinkedIn investor profile where you can say like, are you a passive fund allocator, an active fund allocator, neutral? What's your typical check size look like? What is your role? Like, are you a founder? Are you a builder? Are you a shit poster? Are you a tokenomics expert, etc.?
Yep.
And then that's like all like subjective, qualitative information, and then we tie that in with the quantitative aspect of Legion score, which if you're a dev, connect your GitHub. It's mostly based on eigentrust, like which repos have you contributed to that people of high trust have contributed to. And then we've got the social clout side of things, like a lot of the mindshare and smart follower stuff, we've been doing for a while. And then you have on-chain, so like both SVM, EVM, what type of user are you, how much capital are you moving around, think kind of like DBank. And then we also have been tracking kind of like how people are interfacing in with a lot of these projects. Are they like immediately selling, or are they holding and using the protocol? And a lot of this stuff sort of ties in for us to kind of create this like base level understanding of these people are valuable, these people will extract value, and then founders can actually go through and curate it. So an example is there's like an AI agent like vibe coding platform called Almanac. They did an initial raise in their second raise ever. Maybe it was like 8 months or 9 months ago. And then they've opened up their second round on Legion to come back to it. And they had, they're well oversubscribed, but rather than just closing it when it, like first come first serve, is like people have put in applications and the founders actually they're curating their cap table now. They've been like,
Yep.
this person, it would be great. Like they can get max allocation. This person could be all right. Let's give them half. This person's no good. Like let's give them no allocation. And I think like the outcome of this is you're going to end up with people that are more likely to be cohesive, communities that are more likely to be responsive, and all these kind of things move back into that flywheel I said before. When TGE does come, you end up in this like significantly more likely situation to embrace that positive flywheel.
Yeah, so it's all about alignment, and we tell our portfolio companies all the time. Actually, like you have to do just as much diligence on the potential investors, whether it's a VC, a fund, an angel, or even retail community or Launchpad. You have to do just as much research to see if they align with what you're trying to do, and if they're going to just extract or write a check and then say sail off into the sunset and forget about you. So I wanted to segue that into, there's obviously many issues with capital allocation platforms. But if you can limit it to like the biggest three fundamental issues you see with these launchpad type entities or syndicates or angel list type platforms, or capital formation, sorry, what type of issues, like if you can limit it to three, do you see as most prevalent, and what you're building Legion to be a response to, basically?
Yeah, there are many. I think number one is information asymmetry. That's probably number one for me. I'd say that the US traditional finance market is so big and is the number one financial market in the world because they have very clear cut rules of what you can and can't do, and they regulate it very well. Right? If the rules to the game are very clear, then you have a lot more trust and people willing to commit more capital, more funds. I think we're maybe the one thing we haven't really spoke about, because it's not the cool, sexy thing to talk about, is like Legion. We've always been very bullish on regulation. In Europe, we're one of the first to make a move on MiCA, market and crypto assets regulation. We've been very close also to the US regime change, and especially in the US, right? We're moving away from the Gary like enforcement regime to now Paul type enforcement by disclosures or disclosures as the main focus of mechanisms for allowing projects to move forward or not. And I think like removing this information asymmetry will unlock like 100x amount of capital. And I think this is why, we had an article in Fortune written, and you'll see my co-founder and I on the Hill fully suited up. Not my typical style, but yeah, I think it's a key component if we want to start playing with more traditional finance companies like the VanEcks and the Brevan Howards of the world. They're very buttoned up,
Yep.
regulation, US focused. And I think that's where I'd like to see this kind of convergence of crypto rails meeting traditional finance. So I'd say reducing information asymmetry is probably the key thing for me. And then second, I mean, each individual aspect I think has a fundamental different issue. So like on the Launchpad side, like they're economically incentivized to sell as many tokens as possible if the models just like collect a USD fee on the amount of tokens. They've
Yeah.
got no care whatsoever how the token will perform, just like do more money, etc. I think like that in itself is broken. That leads to a lot of original platforms that start off well. They start realizing like, okay, actually now we're getting to a bear market. There's not so many good projects anymore, but let's just keep pumping it through because we need to make money. And then you lose a lot of the brand. So not being able to kind of like keep up the due diligence aspect and just like churning through a bunch of like average projects. That in itself is also a big fundamental issue that kind of got where launchpads got to their bad name, right? You end up with like doing dodgy things for temporary price support, and then everyone's sort of walking away after like a 90% downturn or dip off a day or two. And then, yeah, I mean, just like general market structure and how each force is interacting with each other, like the private markets in the public markets and the competing priorities there, I think is also a big fundamental change. And then this kind of covers the first one I mentioned around information asymmetry, just but clarity in regulation, allowing people to know what they can and can't do.
Yeah, you made some really interesting points about these these launchpad and capital formation platform business models, and I want to linger on that for a moment if you don't mind. I know that what you're hinting at, like Legion might be moving in the direction of tokenized traditional financial instruments or real world assets, things like this. And there is a huge market for that, not only within the US, but globally. There are many individuals in different countries that would love to have open, widespread access to instruments being offered from the US. But up until today, I think Legion's historical activity has been more so focused within like Web3 product infrastructure, etc. And a lot of what we've seen within the Launchpad space, as you mentioned rightly, these business models that might rely on like token liquidations from like advisory allocations, they might rely on token-based access models where these companies are requiring a holding or staking of their own platform tokens to be able to participate. And all these models in a down market start to break, like you had mentioned. And a lot of times when these companies struggle financially, they're forced to maybe liquidate their own token and then make concessions and then corrupt their vision, essentially, right? And so I'm wondering, like, what kind of ways are you approaching these challenges? Because in that stage of building the brand, onboarding notable and successful projects, and delivering great quality to your consumers, whether it's like traditional financial instruments or Web3 and crypto, that entire journey onboards a specific demographic. And when things change within the markets, or maybe, for example, Legion decides to change the types of assets that it plans on offering, maybe then we run into an issue of investor education and people are more onboarded through speculative gains or the promise of what was yesterday. So I'm wondering, like, how do you plan on, or how have you kind of approached these challenges of your investor education?
I think you touch on a pretty interesting point there in the sense that, like, from a first principles perspective, you probably have to look deep down at the motivation of the founding team. If the motivation of the founding team is like just purely like financial gains, like you can probably predict like if this situation does arrive, where the project ends up going. Obviously, we just met, right? I always encourage people to like take time, do due diligence on everyone, find out actually how much social capital they
You
have.
seem like a nice guy.
Yeah. I met some people that seem like nice guys and they're not, and vice versa. But I think like both Maddie and I, we are fundamentally interested in like fixing the capital formation market structure of today and properly competing with the IPO scale. You said before, obviously, like in 2024, there was north of $126 billion in IPO proceeds. Compare that to crypto in 2024 and public token sales, like less than 100x, right? So I think like we still have a lot of room to grow. And yes, if like there's a market downturn on the token side, there's perpetually bull markets, bear markets, and traditional finance for sure. But I think it's like where we're going to allocate our time, and what type of projects we want to push forward. I think yes, there's a lot of interesting, more or less sexy, you could get rich overnight kind of plays, and more projects that are like, have been sort of cash cows for big money players for a very long time that you can democratize. So I think that we're definitely on that route for sure. If the bear market comes, we're not just going to pack up shop and try to extract as much value as possible. Obviously, having capital in the bank makes a ton of sense. But yeah, I think like where we are today is like moving closer to that more traditional lens, bringing in a lot of those disclosures. That all feeds back to this investor education component. So we have
Yeah.
a few exciting things to come out about this. But yeah, I think around reducing information asymmetry, improving disclosures, investor education, like these are all core components if we are going to transition from CT to global financial like market replacement.
Mm. Yeah, let's dive into this kind of like future direction. And you've dropped like some hints of alpha, and I'm wondering what what you'd like to share that might be a kind of like a boom moment within the boom room. And again, congratulations on the successful seed fundraise. It's incredible, and I think both Carmelo and myself were very impressed seeing these brand name investors: Coinbase Ventures, Kraken, Crypto.com, and all these other ones within the cap table that suddenly grew, and it might seem like suddenly grew an interest within like the world of retail investing around digital assets. And it, from our perspective, it looks like maybe they're making a bet on the future around tokenized real world assets or traditional financial instruments. And so I'm wondering if you can share like what is it that they're making the bet on? What is the big future around blockchain rails and digital asset technology that they see a huge future in when it comes to retail focused access?
I think to draw a probably decent parallel now is digital asset treasury companies, right? That most of them are trading above NAV, right? And that is just a pure result of the pent up demand to the traditional public markets that want access to a lot of these assets, right? As I said before, crypto rails, like they're on 24/7. They're programmable. They're global by nature, significantly cheaper settlement. Like these are all 10x improvements on what's currently out there. And I think like even beyond just like doing the capital formation side of things, it's like you see Robinhood making announcements, moving things on chain. You've got like Kraken Solana with X stocks. You have a lot of these firms like BlackRock seeing a lot of the value. I mean, this is already in motion. I don't think there's going back on a lot of this stuff. So I think it's like pretty clear. I think this regulation clarity in the US unlocks a lot of that market and will hyper accelerate a lot of what has kind of been talked about for a very long time. But yeah, I mean, basically, the financial system will be on chain. And what part of the future of that do you want to hold?
Interesting. Yeah, actually, that's a good point. We did an interview with like Hypersphere Ventures a month and a half ago, and it was mostly about these treasury accumulation vehicles and even ETFs. But do you see that as like a step in the right direction or the wrong direction? Like it might have a positive outcome, but are we taking stuff that's already on chain and then bringing it off chain? And it might open up a new market or more demand flowing into the space, but it's also happening in a more opaque manner and it's coming further away from the original goals. Do you see that as like an evolution or going backwards?
I mean, it's not the exact ideal outcome that I think, you know, maybe someone might have had back in 2009 when they were writing a white paper. But
Yeah.
I think all these things are steps in the right direction. I think,
Okay.
even like on boom and bust cycles, like you kind of need that mania to come in and fund a lot of the innovation or to have people more comfortable to adopt technology. Or all of a sudden now you've got, like trust by proxy because, a brand is doing this particular thing and it's got a big traditional finance name behind it, right? I think that, these definitely, there could be a situation where, everything is just off chain representing things on chain. No one actually ever uses anything on chain. It would be a sad feature. But I think like for now, just being able to demonstrate the sheer pent up demand in the traditional public markets for a lot of these assets, I think that then says, oh, okay, there's definitely innovations to be had here. It definitely makes a
Hmm.
lot of sense that, we can actually move a lot of this stuff on chain. We can, like the real world asset it has kind of been booming. A lot of people doing really interesting things and regulations evolving. And if there wasn't so much funds going into a lot of this and potential money to be made, then a lot of that auxiliary items around innovation wouldn't be funded. So I do see it as a net positive, while not the perfect ideal outcome.
That was a very diplomatic answer. I tend to agree with you. It is like it's achieving the goals that we want to see, but maybe not the way that we imagine. But I agree, and I wanted to also ask. I think Sasha was alluding to, these sort of tokenized equity offerings. We've seen some launch pads or capital formation platforms like Republic, for instance, that tokenizes equity, securitizes it basically, and allows like a limited pool of vetted investors to participate. Do you think there's room for that in any other platforms to do token and equity for companies that have both? Because this might reflect what we're seeing. Like Sasha and myself at Arcanum Ventures, we don't typically invest in token only ever. We would prefer to get company exposure, equity exposure, and upside, and token as a sweetener more so. But do you think these allocation or capital formation platforms will reflect that change, seeing as VCs are more starting to pivot and invest like that instead of just token only investments?
Without directly answering this, I would say that we're very bullish on equal access to opportunity.
Okay.
And you
Oh
could
man.
imagine two parties, one that gets access both to the potential equity upside and token upside, and one party that could only get access to token upside. I
Okay.
think you'd probably want to see those aligned if you're going to truly have equal access to opportunity.
Okay. I think I could read between the lines. I agree.
I'm wondering how that kind of manifests itself within the digital, or let's say decentralized infrastructure space, right? And there's so many regulations that need to be put in place before something that like that really happens, because it essentially feels like the bypassing of a security offering through an IPO, right? And so I'm wondering, like, if these assets, let's say we fast forward through regulation and regulators kind of just like miss the boat on this, and we end up taking um, the initial security offerings or equities offerings to market that are tokenized, that are transacting on this decentralized infrastructure, that are maybe subject to the same types of price action and market movements that can be influenced by manipulation of this type of code, like on the AMM, for example. Like, how does that kind of manifest itself on the regulation side? And do you feel like that is an appropriate way of taking these assets to market, considering that these companies are most likely doing that for their own capital formation, right? And they're trying to essentially capitalize on decentralized or fractional ownership of their company to bring on some capital and either build forward or survive. And there might not be a whole lot of protection to build speculation around that offering.
Very complex topic to discuss. Um, I would honestly say to you, being pretty close with regulators in different regimes, that I think some of the stuff is probably going to happen a little bit faster than we've previously seen it happen.
Wow.
Yeah, I think people want clear rules. You see some companies playing a little bit closer with regulation, especially in this like tokenized equity side of things. Some companies are a little bit more wild west. Is it only KYC on mint or redeem, and then this thing's free to trade wherever to anyone, or do you have more of a fully controlled chain, even where a lot of the trading happens? I think that regulators are very well aware that they need like clear rules and guidance for a lot of this, and I think they've been actively working on it for some time. And yeah, I think we'll see more clarity. Pardon the pun, probably sooner than people are expecting.
I think that's really reassuring and very surprising, because I think, like, even from the tokenomics side, Carmelo and I have been pulling our hair out for years, wondering like, when are these regulators going to start talking about digital asset use cases for these types of assets, like a utility token, right? And the lines are blurred, especially considering it's a completely new asset. If you're taking a portion of the supply and selling it to investors via some pre-sale mechanism, but that token's also being used for part of like a product experience. So it's incredible from your perspective to hear that like there's conversations happening here, because I thought they're still in court talking about what the hell is Bitcoin. And that was kind of disappointing to see that on the news cycle every day. I want to take a step back actually to the idea of Legion or others offering these types of assets. And initially, you were kind of alluding to, tokenized traditional financial instruments or maybe real world assets coming on chain, and all of the buzz behind all this institutional capital coming on chain is that we're going to tokenize stocks, we're going to tokenize bonds, we're going to tokenize all these different things, and these aren't really like asset launches. Like we're not talking about the venture side, right? We're talking about more so just the tokenization of something that exists that's already in many, many people's hands, but now it can be accessed by some other people. And so, do you think that it's as critical for platforms like Legion to be around to help facilitate that? Or is that going to kind of like naturally happen and platforms like Legion might be just sort of a temporary gatekeeper in that sense?
Yeah, it's a good question, right? And I think it probably where we have some future that we're going to live in, right? And I think depending on what different teams, companies, Legion is doing today, it might dictate what that future looks like. You can very much imagine this like we're traditional finance, we're doing everything ourselves. When we're ready, we're gonna like take a few of these things and like represent them on chain, but we still own them. And then we get some of the benefits of being on chain, and we can market it as on chain or whatever. Or you can imagine a future where natively begins on chain, and these assets then have a traditional finance. Wow, look at that! I think it's actually with this camera. If you do that, these assets have a like traditional finance version of it that gets traded, but everything is done fundamentally on chain. So I think that where we are today is in the game, and we're a super ambitious team. We're in the game of trying to create that future. So I'd say staying close to a lot of this is pretty critical, and not just like passively watching on. We've been very active. We've been very active in regulation. We've been very active meeting with regulators. We've been very active on how we think things should be done in the future. And I think a lot of this information will be released in the coming weeks for sure, in the coming months. But yeah, I think like the crux of it, if we're just going to sit back and be passive and hope that a future that we want to see happens, is not our style nor very productive. So yeah, I think yes, it's important for us to be active and pushing the boundary.
Interesting. Yeah, actually, you just reminded me too. I had a question about regulation. I don't know if it fits the stream, but you mentioned like being MiCA compliant, but also you're talking with regulators in the U.S. And what are the challenges associated with like complying with different jurisdictions, and where there might be overlap and when there might be disagreements about how these assets are managed or launched or maintained?
I have to answer this in a very
That's a
diplomatic
big one.
way. Yeah. I think the key takeaway here is that MiCA was great. It was like it really is the first, cross-country regulation, clear regulation crypto has defining is it
Hmm.
utility token, is it something else, and vice versa.
Yep.
Um, but obviously, being first, you don't have the luxury of seeing what's worked really well and what maybe hasn't worked. So I think
Hmm.
that the premise of MiCA again is no surprise, disclosure focused. You have to put out a MiCA compliant white paper. You need to disclose what the money is going to be used for, what the future of this thing should look like. If you are changing anything, you need to update your MiCA white paper. Like that's definitely a step in the right direction. I think the US, like Paul Atkins talks about this a lot, and Commissioner Peirce as well, of like disclosures and allowing people to make informed decisions themselves. I think the US has probably seen a lot of what has worked out of MiCA, and
Hmm.
they have their own spin on how it can be improved. Because I think there are definitely some things that can and should be improved there. But more or less, I think that the general idea of disclosures being the core tenet here is probably going to be pretty consistent across all jurisdictions eventually, and we should hopefully find something that makes it even, because the exchanges want it, the projects want it, investors want it. The more consistency you can have on a global scale, the easier it is for everyone. Like it's a nightmare already. Like even like some particular requirements around when you have to have a MiCA white paper in, right? It needs to be reviewed 20 days in advance before even making an offering. And that's 20 business days, not including public holidays. And they won't tell you, it's not like a yes, no. It's just like, if you get to the 20 days and then they haven't told you no, then you're good. But if they did, then, you have to make changes, and, the 20 days can start again. So I think consistency among regulations is pretty key. And I think some of the bigger regulators know this, and they're probably thinking about how can we be consistent, not just within our regime, but across country.
Interesting. Yeah. Just like they have to get vetted by these different jurisdictions too. Like I imagine Legion's helping with that because you sound like you know your stuff and you're talking with these regulators actively. Um, I wanted to ask also, like, I don't know if we touched on this, but like, how does Legion vet companies that wants to launch with it? Because we know that this is Sasha and I have experience working with a Launchpad before, like several years ago. We know that that was one of the biggest fundamental compromises you have to make. You don't want to launch too many companies. Obviously, you want to launch as many, like you rightly said before. You make money off of launches, so you want to launch them, but you don't want to dilute the value. You don't want to dilute your reputation and launch just anything. So you have to be careful about who you work with and who you choose and how you vet them and what value you think they can bring. So how do you sort of vet companies? Because we get asked this all the time as well. Our portfolio companies ask us, where should we launch? Where should we look to raise money? Which angels? Which syndicates? How do we choose? There's so many options. Most of them are not that great.
Ooh, yeah, this is probably the secret sauce, the bread and butter. And then I think this is where tapping like the Delphi Ventures experience comes into play here. We're very active, even to some degree, kind of like a traditional investment committee. But then we also have like a ton of really interesting models that we're using quantitative data to understand, is this positive, is it not? And then the final one is we also have like a particular platform called projects.legion.cc. As a project, you can come put a bunch of information in, apply, and then we actually have an AI bot that we got from Tom Shanahassi, actually, on the Delphi team, that does like the first cut pass on it. And if you pass that, then we've got kind of like a good, accurate representation of what the crypto community would look like, anywhere from like principals at top funds down to like I don't think left curve is the right thing, but more like in the trenches type people.
Yeah.
And then that also just gives us like a really good, accurate representation of the amount of demand here. So it's a mix of like traditional investment committee with experienced VCs, accurate representation of market from a lot of different players, and quantitative data.
Hmm. So the secret sauce for any founders listening is just use ChatGPT and ask them to create a pitch deck that is going to be very, very much liked by your own AI. So hopefully they can
Yeah.
game that entire system.
That gets you
But
through first the step one, and then I don't know if how you fare after that.
just and then you just go right into logo farming. Well,
Yeah.
unfortunately, we're coming to a close. It's been an absolute pleasure speaking with you on all of these things around capital formation space, the future of regulation, and tokenized offerings of all sorts of different financial instruments and real world assets. Before we close out, I'm going to ask Carmelo to introduce our last question to you. But before we do that, I want to remind all of our viewers, if you're enjoying this content, make sure you tap or smack or like or whatever the hell to that like button. Throw us a subscribe or a follow if you're enjoying this. We've got many more fun boom room interviews coming out. And again, Fabrizio, thank you so much for coming on. And Carmelo, take it away, man.
Yeah, actually, Sasha lied. I have two more questions. The first question before I get to the last question, we typically close out. But I think maybe this should, Sasha, be the second to last question we ask all the time. But do you have, I mean, you're the perfect person to ask. You're very involved, especially in this specific stage of company evolution. What would your best few short tips for founders in this stage looking for, fundraising tips, where to look? What is your advice? Because you've obviously successfully raised from some of the biggest and most well-known companies in the world, funds in the world, and capital allocators. So, what are some advice for some of the founders that may be watching that are wondering, how the hell do I raise money? What do I do after I get that money? How do I market that? How do I find VCs or angels or syndicates or retail to potentially invest?
Yeah, this, to be honest, I'm super passionate about just like founder life. What's
Yeah.
good, what's bad. Like in general, being a founder is an extremely difficult thing to do, right?
Yes.
Like people always like to celebrate the glory, like, oh yeah, it's like VanEck, Brevan Howard leading this new round and vice versa. It's like, there's been a lot of work gone into that, right? My co-founder and I, we work 7 days a week, almost 2 years plus now, right? So we're like super passionate and super motivated. So I think number one, You need to have that passion. Number two, um, if I was going to just like generalize it, I'd say like social capital and relationships are probably the most critical things.
Hmm.
I think you probably have a very low hit rate if you just knock on the door of a big name fund and be like, "Hey, we've never met before, but would you invest in my idea?" I think slowly understanding that depending where you're building, there's particular funds, particular angels, particular retail investors that will add more value than not, and you should be starting like to build that relationship with
Hmm.
them like perpetually. I used to mentor at Techstars,
Okay.
and there was two things that always came out. One, they said that you should have at least 40 touch points with a fund allocator before a check is written. So whether that's a Telegram message ping or a coffee chat or a general life update or whatever it might be, it's like continuous build that relationship, because it's really like dating, right? I think if you go into this thing thinking like I will accept capital from anyone that will give it to me, is already the wrong mindset. You need to be
Yep.
thinking about like, how does this cap table come together and what is the value that it's going to bring that helps me achieve my mission in the long run. Obviously you're not done when you get the funds in the bank. It's the start of the journey, a necessary step to getting to the end journey. But I think ensuring that you do have good relationships with capital allocators over time, that will do a world of good for you moving forward.
Wow, yeah, I'm so glad I asked that question then, and I also lied. Like, I have one more mini question there too, because we forgot to ask. Like, what is the? You don't have to reveal anything that's not announced yet. This episode will go out likely in the next few weeks. But is there anything you're looking forward to? What's the future hold for the next 6 to 12 months for you? If you can divulge or share any exciting updates for the community that might be looking and watching this.
Yeah, give us the alpha.
Yeah. How many weeks is this thing going to go out in?
Maybe like a month. Let's say a month. Next month.
Hmm.
If it's more long term, that's fine too. Like, we don't want you to pre-announce something and front run your own self.
Yeah, don't get
Yeah,
in
yeah,
trouble.
yeah, for sure. I will stay.
Vague is fine too,
Uh,
like more generic,
Vague.
long term outlook.
That is a less cool answering of the question. I think maybe just as, like, to say we're not just like, oh guys, we just raised funds, thank God, now we can kind of start. We've been heads down
Yeah,
working on this new iteration since January this year. And so yeah, you'll see fundraise will come out, and then we have 2-3 big announcements to make for the remaining part of this year. And I think it kind of vaguely speaks to a lot of the things we've been discussing today,
awesome.
um, and then hopefully should take us in the step of right direction around distribution, uh, brand, supporting on reducing information asymmetry, and I think more clarity in regulation.
All right, well, we'll have our eyes on that, and we're excited to see it. Then we're gonna have to wait like everybody else. But thank you for answering that. And the last question that Sasha alluded to was, we end every interview asking, aside from your own company, obviously, what are you most excited about for the next 12 months in general? Like, it could be a specific company or project or token or community. Doesn't matter, or it could even be a sector, a technology sector. So yeah, we get a wide variance of answers here on this last question.
Yeah, I guess I would be cheating if I said the general like regulation and adoption of tokenization in traditional finance, right? But that really is the true answer. I think separate to that, I would say I've really been interested in a lot of the like true decentralized AI plays and seeing
Hmm.
um, I mean, sometimes crypto gets a bad rap for being like financially focused and just building things that actually aren't meaningful, but just get crazy market caps.
Yeah.
But I think that there are particular companies that both like AI researchers, genuine AI researchers respect, as do people in crypto, and a lot of like properly decentralizing like models and inference and data sets in a meaningful way. I think like that is probably also mission aligned with what I want to see into the world. And I think that's a very interesting domain, especially if a lot of these like big traditional corporate players decide to continue to either close source items or manipulate it in a way that is economically beneficial to them, but maybe not socially beneficial to the rest of the world.
I love that answer.
Incredible. Yeah,
Yeah.
that's such a good answer. I this idea of like decentralized AI infrastructure is so needed right now. There's so many conversations around like breaches of data privacy and security.
Biases and exactly right. It's like
Wow.
all the stuff that like I'm not very big on social media. Like even like I obviously have X now. It's kind of a core proponent of founder-led marketing,
Necessary.
but yeah, I mean, I'm not like hanging out on TikTok or Instagram or Facebook. And I think like what I used to hate back in the day is just like seeing how, I mean, maybe the luxury for me growing up, because I never really settled in one place, is like you got to get a lot of different snippets from a lot of different places. And I think like seeing how a particular society was like melded and shaped to have a particular point of view because
Hmm.
that's what they were being fed. Like for me, it was very obvious because I'd go to one place and be like, why do these people think this is kind of crazy, but it's just the norm? And then go to someone completely different. It's like a whole different situation. And realizing like a lot of this, like traditionally comes down to media, but especially in the world we are now, like hyper accelerated targeted ads and like growth is like, especially the younger generation from the ground up, is like you can basically control beliefs and outputs by what you serve individuals as they continue to evolve and grow up, right? And I think like that's a very dangerous thing to think about. So seeing that done in a more appropriate, mature way, I think is a very interesting problem to be solved.
It's such an existential crisis right now. not only not only on the regulation side around like what's happening in the AI space, but just the pure lack of understanding to even begin to understand how to regulate. But yeah, what an incredible answer. Well, Fabrizio, it's been an absolute pleasure to have you on. Again, to all of our audience members, Fabrizio Giabardo is the co founder of Legion, retail investor focused capital formation platform. Make sure you check out the links to the show notes to learn more about Fabrizio and Legion. And once again, thanks so much for coming on, man. We've got to have you on maybe a little bit later this year after all these announcements come on.
Yeah.
Yeah, well, I'll be back before you know it. I appreciate the time, fellas, and super good questions. And yeah, really great to connect. I think it's got an exciting time for the broad general crypto industry, and happy to be part of it.
Yeah, thanks very much. And thanks to all of our viewers for watching. And make sure you stick around. Again, some more fun content coming out. Until then, ciao, y'all. Take care.